Welcome to the Traders Show. This show is brought to you by Pepperstone. Pepperstone is an award-winning online global forex and CFD broker. It offers unparalleled service, exceptional pricing, and fast execution speed. Pepperstone gives you access into the global markets with more trading opportunities, first-class customer service, and peace of mind. Withdrawals are quick, and for those in Kenya, M-Pesa is enabled. Pepperstone Markets is regulated by the Capital Markets Authority. To open an account with Pepperstone, you can click the links on the descriptions below. Hello traders, welcome back to another episode of the Traders Show. Alongside me, I'm joined by two of my colleagues. So we're going to talk about a very interesting topics. Over the last few years, we've met with very many people who have lost money in forex scams. Others have invested with people who are not competent enough to look at the markets. We know trading is challenging and not everyone has the time to invest to understand markets, and there's always another option of giving your money to a money manager who will charge you a certain percentage, but they'll invest for you and probably give you a return of 20, 30, 40, probably even 50% annually. But how do you come to make the decision of which money manager to pick? How do you avoid giving your money to scammers? And what are the steps for those who want to become money managers? Ultimately, for every trader, that's the goal. You want to become a money manager, you want to have a portfolio, and you want to have clients. But what are the steps you need to take? How can you plan for that? So those are some of the things we'll be tackling in this topic. My name's Ken, I'm the founder of Financial Hub. So alongside me, I'm joined by two of my co-founders and partners. They'll introduce themselves and then we'll jump to the topic.
Hey, what's up guys? I hope you're well. My name is Caleb. As Ken has introduced the topic, that's what we'll talk about today, and see how that goes. So we'll give you a few, especially people who are not into trading that much and really want to look for people who can manage their money. There's a couple of steps you need to do that we'll share with you guys today. Apart from that, my week has been fine. A few trades running. Last week I had a few trades, lost them, went straight to loss. We continue seeing dollar strength. Okay, there was a lot of dollar strength in the market, which continued into this week, early this week, and but I have another trade running. I'm very long on the dollars, I'm very long on Dow Jones, and seeing how that goes. So that's it from me, and yeah.
Hello people, my name is Taras. I think by now, if you've been listening, you're familiar with us. And Ken has already introduced the topic. It's straightforward. We're going to talk about money management. So it's the ultimate goal of most traders. So that's where you get most capital by money is in the people. So you have to work with people and be able to at least do a good job with them, and they'll make you have a bigger fund. So basically, the goal is basically to grow your fund. I think that's it. So from wherever you're starting to trade, let's say you have $10,000, $50,000, $100,000. The main goal is to scale that up to billions, right? And it's so hard for you to just scale that up by purely compounding, because trading, you also need to live off your profits. So you basically need to have a bigger account for you to to earn like reasonable returns. So when you make a 10% of a billion shillings, that's sustainable return for you and your investors. So the only way you'll get to that point is when you start working with investors, and that's what we're going to talk about. Ken also stated that most people have fallen victims of trade. Okay, they're not really scammers, because for me, it happens to look like a scam, but that guy was just not a good trader, you see. Like, he didn't have the intent to scam you, you see. Like, he didn't take the money and disappeared. Okay, some have disappeared, but most of the people come to the markets, and the markets take the money. So they're just victims of the markets. So we'll also point out that, like, how do you notice a good money manager? I think that's it for today. My name is Taras, and I hope you enjoy the topic.
So I'll start off and talking about how to find a good money manager. What are the steps you need to do? So number one, I remember a story I remember listening by, for those who don't know, Mike Maloney. He owns, I think the company is called Gold and Silver or something. Is the company called Gold and Silver?
I think so.
Yeah, Mike Maloney. So Mike Maloney, back in the 90s, or was it 80s, he gave his money, I think the parents of the family gave their money to someone manage for them, and that person was, as Taras was saying, very incompetent, wasn't making good returns. When you call him, different story. So he decided to take matters into his own hands and researched about how to trade in the markets, how to invest, and how to make money in the money markets. But now many people won't do that. Many people are not, well, you're already caught up in a job, or you have other duties to do. Some people are just in a whole different career that has a lot of time, takes a lot of time consumption, and they cannot get time to start a new career. So if you're looking for a money manager, so I think we'll start with what you need to do before you, as you look for a money manager, then we'll go into steps if you want to become a money manager.
Yeah.
So I think first step, which is very important, first and foremost, is do a lot of research. So even if you have a lot of work and like you're held up somewhere else, it's very important for you to do research. Just do, as in, don't be in a rush, man. Even if you have 10 million, 100 million sitting somewhere, man, this is a lot of money. You've worked your whole life, or pension, pension money. You've worked your whole life, and you want to invest this money into someone. Well, hold that research, or look for someone who can do research for you. Now, one of the things you can do research is just go. You can go, like, let's say some people come to us. We normally suggest some people, if you come and buy a book, it will give you a few overview of what you need to know about the markets. Just a rough overview. You're not looking to, like, for example, if I want to invest in a biotech company, I won't just go and look for biotech companies and invest. I'll go read a few about biotech and just get the overview of what do they do, what am I investing in, because I've worked for this money. So number one, do a lot of research and educate yourself. Either you can go to people like us who can teach you so that you know the basics, because we'll tell you, because if you're looking to invest, you're not looking to make 100% return in a month. You need to know these basics of what trading is all about, investing is all about, long-term investing, because there's short-term investing, long-term investing, different pools, different people trade differently. So you need to research for all these people, what is the minimum account money I can put. Another thing you should also ask yourself, am I looking to grow this money? Am I looking to live off this money? Am I looking to pay school fees with this money? Because people come with different goals. So depending on what you have, what you're looking for will determine which fund you'll go for. Okay, depending on your goals. And I remember I was teaching that in the class yesterday. Not in a class, a client came. I was just consulting him, Joseph. When I was talking to him, I was telling him he has this amount of money he wants to start trading. And so imagine yourself as an investor. You want to invest this money. Ask yourself, the number one goal, what is the goal with this? And for example, like what I've just said, are you looking to grow the money? Are you looking to make a living? Are you looking to multiply it? Are you looking to pay expenses? And the other question is, how much do you have? And what percentage return can I get? Because, for example, if you have $1,000 you're going to invest in someone and he's making 10% a month, for example, that's what, $100. You can't live off that. You need to. So your goal is to make a living, but you have $1,000. Go look for more money. Look for maybe 10 million. If you make 10% a month, that's $1 million. You're making a lot. So then some people can do 5%. So depending on the fund you're looking for, it all starts with you first. What are your goals? What are you looking for? How much do you want to earn from it? And are you in it for the long term? Are you in it for the short term? Because some people just come and invest, double money, buy a house, then they're relaxed. But if you're looking to grow it long term and you find someone who's giving you 5% consistently, it might sound little, which is not little, but in the long term, it adds up a lot. So do a lot of research on the investors you're going to invest in. And right now, luckily, in Kenya, at least they're coming up. Like we're talking to Taras and Ken today morning about SIB. I think you guys know more about it. I don't know the Montex. Maybe you guys will. I've not yet read it. I've just listened from you guys. But maybe Taras, you'll share on your point. But yeah, that's my number one point. Do a lot of research, and because before I finish my point, many people like this what you're just talking about when you're starting off, the people who come and invest, and you give someone, this person, yes, you've given him with good intent. Also, the person took it with good intent, but they're not yet in a level where they can trade consistently and make certain returns. So some people are blinded by the fact that I'll come to you and show you for the past 3 months, I've doubled my money. And you're like, okay, take my money. In your head, you've already figured in 3 months, I give you $1 million, I'll have 2. That's not the right way of doing that. Look for someone who has a track record of about 5 years, 5 years or more. Consistent returns, you're looking, there's no those crazy swings. Because if you look at someone who has a 5-year track record, they've averaged maybe 5% a month, you're almost certain you'll be getting 5% a month. This person who showed you 3 months 100%, that's too little of data to know how much you'll make in the long term, especially if you're in it for the long term. So we've had these people who came in like VI Portal, Interweb. Those guys who we don't really want to say, it's a good point to say it scammed people. It's more or less they weren't competent enough to trade people's money. So yeah, number one point, do a lot of research, because you're going to give your money to someone else and you want this person to be very professional.
Yeah. I think on your point I'll add on is like there's a problem outside here in terms of general investments. There's a problem in terms of lack of investments knowledge. You see? So first of all, most people who the majority of people who want to invest, let's say in forex and stuff, they come with a very, very wrong goal. You see? So they think they have a wrong idea of what forex is. And as you said, just do research on what is forex. You see? What is the average return of professional forex traders, not Instagram traders? So most people come and they've seen Instagram traders with outstanding returns. See, so
Crazy
they're like, hey, so there's no need for me to put my money in the bank. It'll give me like 7%. Real estate also, it's a very long-term investment. So they think forex now is the killer. As happened, I'll multiply my money.
Forex killer.
Yes. So like the fact that most people coming to invest in the forex space, they have they don't understand what forex is professionally. Like just look at at top 10 fund managers, Ray Dalio, Peter Lynch, all those people, George Soros. What is their average return? As Kwangi outstanding, I don't think there's anyone there with over 200% return annually. Yes. So like the fact that also another thing is they think it's a get rich quick scheme. So they think if I give you $1 million today, that is mimi kazi hata naweza acha. So it's just for you to work for me. You see, that guy literally comes to invest in a money manager. Let's say, for example, you're a money manager, and do you remember Agito telling us this person literally just wants to pay mortgage with you? No. So amekuja hapo hajui this is an investment. Yani, in that one, there's risks. See, so they don't even think about the risks first of all. They just think about what is the return. So hata kufanya research anaangalia tu what is the return. They don't look at the structures of the fund. Like what percentage of their portfolio is in what asset, because like funds publish the data of what they are trading.
Of course.
Like you can know, like let's say there are crypto funds and there are forex funds. So let's say if let's say like your personality is not being that volatile, of course you want to go to invest in a crypto fund, right? You'll go into a forex fund or maybe a bond fund, or maybe just put the money in the bank. So like people have not wrong knowledge, but people don't know like how to handle investments. So even as they come into now finding a money manager, most money managers won't work in how they think, you see. So most times the money manager doesn't want to work with you, or probably you won't be satisfied with the numbers he's giving you. So maybe you'll also walk away. But if you come to understand what it takes to trade, like what it takes to pull a 5% return a month, you'll clap for that for that manager. And you need enough. The problem is you only have too little money. If I come with 100 million shillings and I give a fund manager who is giving me 5% per month,
satisfied,
I'm the happiest investor, bro. So problem is lack of enough money to put into a forex fund.
True.
And also the objectives are wrong. So I think my main point as I start this topic is investor knowledge is the most important part before you even decide to get into investments.
Yeah.
Just learn about investments first.
How they work.
What are different funds, different investments streams, because there's a lot in terms of investments. So before you choose forex, you really, really have to have a very good reason why you're choosing forex as putting your money into a forex fund. So education is the first thing. So just invest in first learning how investments work, then put your money. So just don't put your money where you don't understand. Yeah. So I think that's the main problem. People put their money where they don't understand.
I think for me, just to slightly move from where you're coming from, but also expound on what you're saying. After you've learned, like if you've gathered the basic knowledge on how markets really work, I think the other thing that you need to avoid is blind faith. So there are people who come and just decide, okay, I'll invest with this person maybe because I've seen maybe he's a good trader, I've seen him trade for some time, but you've never sat down and asked yourself, okay, show me your performance. So I think it's critical for you to sit down and observe someone's performance over a long period of time. I think that's also something that is very, very valuable. I don't think you can really tell someone's or judge someone's performance if they've not been trading actively in the markets for 5 years. You can tell someone might become a good trader. You can tell someone is on the path to becoming a good trader, but there's the good trader. I don't think you need to, if you're investing your money, there are people who are comfortable backing people who are developing. Like there are people who have enough money to say, okay, I'll give you this money. Because even the best money managers had a starting point. Warren Buffett are the first people who gave him money without a track record, without anything. And they just trusted him and they said, okay, we've seen your knowledge in this space, we've seen your work ethic maybe, and we're comfortable, we'll give you this money. Like you're saying, Steve Schwarzman was looking for 100 million or $1 billion shillings.
100, started the 100.
There was one person who just gave him, he pitched to very many people.
Many.
Then one person just decided, okay, I'll give you 100 million.
And he didn't have any track.
So when you're starting out, even us will go through that process where like there's that one person who will say, okay, I've seen what you can do and I'll give you the money. But if you're not that person, now, aside that person, what you need to do is to look for someone who's been doing it and has done it successfully. So you need to examine someone's track record, look at their track record, like, okay, at least a 5-year track record for me speaks a lot. A 3-year track record can work, but a 5-year track record ensures that everything is fine. So what you do is you sit down, examine someone, and then tell, okay, what are the risks contained? Because again, like you are saying, what's the objective? There are fund managers will promise you 200, 300%, but trust me, you'll go through 20, 30% drawdowns. If you're going to look for a 30, 40% return, okay, you won't have as much volatility, but your return is capped at some point. It's a relationship between understanding risk and reward, risk and return, the risk-adjusted return thing. For me to gather some returns, I need to take some risk. And once I'm taking some risks, obviously at some point I'll have to go through some rough drawdowns.
For sure.
Yeah.
And if you can't stomach certain drawdowns, then there's no need for you to take on some funds. Are you investing with the objective of making money a lot? Are you investing with the objective of safeguarding your money and just having some little cash?
You need to know the goals.
Exactly.
Objective.
Or are you investing with the goal of having some cash flow? Maybe after the end of 6 months, you can have some little money coming from this cash. What really are you looking for? The minute someone just says, like, one thing I've come to learn is any person who's looking for 200, 300% return and is looking for it in a quick fix is bound not to become rich, unfortunately for me. I don't think there's any man who's gathered a fortune or who's created wealth who thinks like that. Everyone who's created long-term wealth understands that this thing takes time. And once you're investing your money, like you're not looking for that high return. Probably a 40-50% return is exceptional in the long run. Because every year I'll be coming close to doubling my money. So that's a very, very good return compounded in the long run. And I'm avoiding deep drawdowns. So examine the track record. That's the point. Sit down, examine the track record.
I'll just question you, then you'll echo on that. So how do you do that?
1, ask for my FX book stats. Yeah. 2, if someone is in the money management business, he should be doing reports. So you should have investment reports from when you started. You can't be managing money for someone and you don't give them at least status updates. So you need to have those reports. You can look for those reports, read those reports. But now the problem with most people is this is work. They don't want to do that work. They want to listen to stories which they've been told by someone or other things. The minute you're doing that, you're taking too much risk. You may make some good decision, but I don't think you're betting on a very, very good bet. You may make a good decision by luck. Maybe the person who told you the info. Like if you come to us, you can also be that smart. You can choose to look for someone like Lawi, sit down with him, tell him, okay, I'm interested in investing in currencies. Tell me about the money managers out there. He's in the industry, so he understands all the people in that business who are competent, they're doing it well. and they're taking some good risk. That's another thing by the way that you can do. You don't really necessarily have to examine down to the roots, but ensure that the person you're inquiring from or the person you're consulting is someone who's competent around the area. If you look into Wall Street, some of the best money managers don't get money from the clients themselves. In fact, they deal with family offices and such people who are basically given money to manage by the rich people, and these people have the job of looking for the fund manager. So there's something called the fund of funds. Like I raise money from rich people, knowing that I can find very good money managers, and then I go and give the money managers that cash. Because for the money manager, also looking for investors is another hassle. So most of them prefer to just focus on trading, and probably hire someone else to look for the capital. You get so that combination is very, very good. So you need to really know where you stand when you're going into that space. But sometimes I also think about it, and I feel like trading is relatively new. So what you're preaching is something that's very, very foreign.
Exactly.
In this country, most people are used to investing in real estate and land. That's what most people are accustomed to. If you tell someone you're buying some land somewhere, it makes sense. If you tell someone you're building some apartment somewhere, it makes sense. But if you tell them you're putting money in stocks, not many people can get it, especially the average man. So it's a relatively new thing. I'm hoping in the next 5, 10, 15
growing,
years. It's growing. And we are very hopeful. But now these are some of the steps. This is the difference now between buying land and... But when I think about it also and expounded, I also think if you're going to buy land, you also do some research. Like you look at...
Of course.
Will roads come in anytime soon if it's far from the road? If the road will come, when will it be built? Are you speculating on that land, or are you buying it for developing? Are you planning to develop apartments, or you're planning to develop your own home? Like there are very many questions which go through your mind when you're going to buy some land, when you're going to put some money somewhere.
Doing any investment.
Any investment. The same applies in the stock market. The only difference is it's quite foreign because it's not direct, like you'll be shown this is the land you're buying. This one now you have to bet on people. And now that's where the challenge comes in, because there are people out there who are ready to get your money.
Yep. So I think for me, I'll also go to at the point you're saying, in that the main problem as to why people are falling for these incompetent traders is because it's new, right?
Yep.
There are very, very few people, and those few people are very, very private.
Yep.
Yeah. Very private.
Very private. So there are very, very few people who have been in the game for more than, let's say, 10 years.
Yep.
And already,
in fact, when you put it that way, you've hacked it. Like any person who's been playing this game for more than 10 years, we can count.
Yes, exactly. So, but the problem is there are very, very few, and you can't meet them on the streets.
Of course.
So,
because one, they don't want to be met.
Yeah, they don't want to be met. So, like I think it's a problem in that the incompetent traders are the one on the streets. the good traders
are the ones hiding,
very low key, hiding, just investing for very, very few high net worth individuals, and that's their lifestyle. But the problem is these people looking for 100,000s everywhere. Bring your 100,000, bring your 100,000. Yeah, WhatsApp stories, Instagram. I'll invest for you here and there. Those people are not good traders, and trust me, the moment someone on Instagram comes to you should be the one going to the fund manager, not the fund manager coming to you, unless you have a certain form of relationship. Yes, but the moment someone is coming to
preach to you.
Yeah, preach to you like, hey, man, and
I make returns.
Yeah, I make returns. The returns are screenshots. See, so
that's in my Facebook.
Hey, not a link that you can even track for a while. Let me track this account for 3 months before I invest. Like screenshots too. Let us see screenshot in my Facebook. Yeah, MT4. Check your profits, my friend. So I think the fact that the game is so new and there are very, very few people. I think I know only maximum of 3 who have been in the game for more than 10 years. Maximum of 3 people. But sisi wengine when we've been here for under 5 years, we are many. And that's why when you come to us at Financial Hub, we won't take your money, you see. We won't lie to you that, hey, give us your money. That's not, we've not gotten there yet. We're still managing our own personal funds, and we'll get to that level after that, after confirming that we've become consistent and proficient in the game, and experience. Also, me, I believe experience, like you can never cheat. Your stuff ni paramount. Experience, like bro, trust me, ule mse yako na 15 years experience, even if he or she gets, let's say, a tail risk and goes down, his chances of coming back to business from zero is so high. So experience also is another thing. Make sure you gather experience before you even think of going into money management. And that's the problem. Most people, most new traders, they're struggling with capital, right? Yeah. And since a trader in his 1-bedroom house doesn't have even that $1,000 to trade, he'll start looking for money from friends, family, even other people outside, just to start and learn trading. Like trading is difficult in very many ways. So you're starting out, you don't have capital enough, you're prone to seek some help. And you'll go and, let's say, I can try make 10-15%.
They can try.
So exactly, like even as you start out, like there is that need for capital. And at least right now, like avenues for getting capital for traders has like zime open up. Unlike some few years ago, me, I think when I was starting out, I didn't know any place you could get capital for a trader. They like, where do you go and get $1,200 live account instantly? So it was just like a very difficult thing. Me, I used to trade with $300, and I think that was my maximum deposit when I was starting. 300 to so like getting that 1,200 where at least you can start learning trading at a good level is very critical. And that's why we have our funding program also. So our funding program basically is for traders who want to start learning live markets. They're starting out in markets and they want to test their psychology, basically, because the moment you go live that's when your trading starts. Even if you read books for 3 years, the moment you go live, that's when you go your trading starts. So at least for our fund, at least we want to make that trader start developing that psychology at a very early age of their career. For us, we read books for like 3 months, then we deposited some little amount of money, which went out of it into the market. So like getting that access to capital also is another step in the industry. So it's a young industry, but it's really growing fast.
The funding,
exactly. So for me, I think the main problem why we don't have these good people, like to even recommend. I think I can only recommend to 2 people, and one at least is public. So I think we like this business. If you're planning on investing, I think the risks are too high.
Risks for
investing in this market currently, in that it's a young industry. You see, you don't have even these good people. They don't have, let's say, in the US, in the UK, there are people with 40-50 year track records. You see, so in Kenya, I think the maximum I can find, SIB has only a 3-year track record. So like the risks are too high in that I don't know how it'll grow in the future. You see, if it was like a 10-year track record, even from the public company, it shows like the industry is solid. You see, so the fact that the industry is too young, I believe that it comes with too many risks. So if you're planning to invest in any forex manager, just know like you're investing in a higher risk fund. In that you better invest in if you're not a risk taker, that is, if you don't want to take risks, you better invest in this, what Ken is saying, old school Kenyan models of investments. But if you want to take that step and believe that forex is a new thing, but I believe in it in the future, like crypto, we invested in crypto because we were risk takers. Like to take a risk too. For but sure. If you don't want to take a risk, the industry is too young for you. So don't even focus on looking for money managers. Just take time to now learn about the industry. Research about forex, the upcoming money managers. Also, I think it's important to go to the point of, I think I let you do that, the regulations.
Regulations like in the market.
Like how the regulations came and change the whole investments.
So
for forex.
Yeah, I can touch about that.